Welcome to Baker Bott's Staying Ahead of the Curve, Considerations for the First Quarter 2020 Earnings Season. I'm Danny David, co-chair of the firm's litigation department and a partner in our Securities and Shareholder Litigation Practice Group. A.J. Erickson is a partner in our corporate department and represents public and private businesses in a broad range of corporate M&A, capital markets, and securities law matters. He will be covering forward-looking information in upcoming earnings releases and analyst and investor calls.
So companies are now in full swing preparing their earnings releases and their 10-Qs. The discussion we've been having so far, I think, has been a little bit more heavily focused on the earnings calls because I do think that's an area that's particularly fraught with peril because companies want to be helpful and they're also addressing questions from analysts in a live setting, and so it's easier to make a football. But there's at least as much work going into the 10-Q prep as well. Although there's been a steady drumbeat of new guidance coming out of the SEC throughout this coronavirus crisis, I think an important thing to remember is that the disclosure principles at work are the same that they've always been. There's always been a requirement to address via MD&A known trends and uncertainties. There's always been a requirement to cover the material risk factors that a company faces. However, the guidance in topic 9, in disclosure topic 9, are particularly helpful in giving companies questions to think through as they work through that existing disclosure framework in the current environment. So important things that come through in that guidance are that the disclosure really needs to be very specific and tailored to the company's particular circumstances. It's been fun or interesting, at least intellectually, talking with different companies that are in different industries, and the experiences that they are having are really far-flung. If you're a grocer, you have a big focus on maintaining your supply chain and protecting your people, but from a business standpoint, you're doing pretty well because nobody's going out to eat and they're buying everything in your stores. Whereas, if you were in other customer-focused businesses or maybe a commodity business, you're facing an existential crisis, and then there's everything in between. The point of your disclosure, though, is to give everyone the information that they need to view your business both as it currently sits and as you see the company in the future, to see that through the eyes of management. And that's something that applies even where there's not a particular line item in Regulation SK for you to focus on. So this can ripple through your 10K and other disclosures in pretty much every area, but two that I wanted to focus on are in MD&A and in the risk factors. And the staff has provided a helpful list of different areas to examine and topics to think about, but key ones I wanted to pull out on are your financial condition and results of operations. As we've discussed, the backward looking isn't as important, but there's a requirement to talk about known trends and uncertainties, and so it's also trying to see into the future, both right now and a few months from now, hopefully, when we've returned to a little bit closer to normal. What do you see happening in your business? Trying to identify what are some of the longer term trends. Will people just continue to work from home? If you're a real estate business, how does that affect your ability to rent commercial space? What is the long-term trend for online shopping versus brick and mortar retail? Things like that, and trying to assess what your business looks like in the future. Also, liquidity is number one. As you know, everyone is doing all that they can to bolster their liquidity and to make sure that it's sufficient to ride out the storm. So the SEC wants to see disclosure about whether you're drawing your bank lines or you're expanding, what do you think your access to the capital markets is? What spending programs have you pushed into the future or abandoned? Where are you refocusing your investments because of a changing demand landscape? All of that. For the accountants, I think a particular challenge this quarter is thinking about impairments, and if for a particularly hard-hit company or industry, even questions about your ability to continue as a going concern. And those will be hard questions, and they're going to take a lot of time and require a lot of judgment. And so part of your disclosure too is appropriately identifying what cautions do you need to give along with these forward-looking statements, not just identifying the statements, but what are the things that could go wrong, or if we're predicting X, showing not just having backup in your records at the company, but showing your work and how you arrive at some of those conclusions. And the other topic that I wanted to hit on a little bit is risk factors. A lot of what we're seeing so far, both in filings that have been made and in drafts that we're reviewing with clients, I think it's going to be very common for companies to include a very customized risk factor about coronavirus and its impacts on your particular business. And I think part of that is, as this crisis has unfolded, people have seen what contingency plans they had before that are working. I think it's also exposed vulnerabilities that people didn't know that they had. And so the risk factor disclosure ought to be consistent with what you're learning. We're also seeing in filings that a lot of companies are adding a lead into their risk factors section, just cautioning that the ongoing effects of this crisis could ripple through all of the risk factors that they've previously disclosed, even though we're not republishing generally the whole set of risk factors from our prior 10K. I do think there will be select risk factors that as you review, you may decide, we really need to update this for the facts on the ground and what we know, but a great many of them you'll say, well, we did a pretty good job disclosing the risks that we face, and that disclosure still holds up. I don't know, I'll ask Jessica or Danny to chime in, but as you think about risk factors in particular, as a company goes back and looks at its prior risk factor disclosures, what do you think are the big focus areas?
Sure, AJ, risk factors are one of the primary items that we rely on in defending securities class actions. We view our job as telling a company's story through its own public disclosures. The problem that sometimes we face with risk factors is exactly what you're saying. Sometimes it is the case that plaintiff lawyers are able to allege that the risk that we're wanting to rely on in our argument has already come to pass, that it is already affecting the business. It's no longer a risk, but it is something that has already had a material impact. So reviewing those risk disclosures for what's no longer a risk and what's actually impacting the business now is very important from our perspective.
Yeah, I mean, as a corporate lawyer, we always talk about the risk factors as free insurance or very cheap insurance, and encourage companies to be pretty broad. I think in an environment like this in particular, it's a little bit easier as the outside counsel or as the in-house lawyer to tell the management team, now, I mean, let's really disclose some worst case scenarios and get ugly, because that's only going to protect you. And I think right now, nobody's going to punish you either for painting in your risk factors a pretty big picture. I think investors and others who read 10Ks are going to expect to see that kind of disclosure anyway, so you might as well make it. A last couple of notes in preparing these filings. One thing is just start early, and that includes not only your internal work, but the discussions with management, with operational folks within the company, with your outside auditors, and with your external counsel. There are just so many novel disclosure issues that come up, and it's going to take time to really be thoughtful and craft the kind of disclosure that's really tailored and forward-looking and specific that the SEC is urging companies to make, and that frankly investors just expect and are really hungry to see. I wanted to note also that Topic 9 addresses non-GAAP disclosures. That's in prior years been a focus area for the SEC. A couple of things that they note in that guidance are one, particularly if you've got a lag between when you publish your earnings release and when you put out your 10Q, you may only have some provisional numbers that are key and still important, and so the guidance addresses how you can still provide the reconciliation to the GAAP metric, either by identifying the GAAP number as provisional as well or providing a range. I think that's helpful. I think it's also notable that if you want to present some kind of a normalized number that excludes coronavirus or some particular coronavirus-related item, just to be very clear about why you're doing that, what you're excluding, and then how you think that information is going to be useful. And then we'll kick over to Brendan and Bridget to talk more about insider trading. But the SEC took Topic 9 and in many of their other recent statements, they've taken the opportunity to remind companies that in a really dynamic environment like this one, new information is coming up all the time for management, and that's really got the potential to get you in hot water, either as an individual buying and selling company stock, or if you're a company trying to maybe capture some of the discount in your debt securities by buying back some debt or whatever, that you've really got to think, not just in terms of open windows, but pretty much on a daily basis, what information do I have that's potentially material and needs to get out into the public domain before I trade?